Good morning, everyone. It is Monday, the beginning of a week. While we hope it starts off in the green, unfortunately, it started off in the red. Not that we need to worry. In the long term, we'll be fine. But interesting topics. Uh, Corey's going to dive into Trump versus Powell round two. Boxing's kind of older school. Maybe this is mixed martial arts, MMA. We're going to see who taps out first, or where this is all going, making sure there's a fair fight. And then I'll get into tech earnings upcoming and gold surging to a record high. And I always do get some questions on buying gold, but we'll talk a little bit about that. As we get started, this is a financial education presentation. You must do your own due diligence on anything that you hear in this presentation. More disclaimer information can be found on ankerstarwealth.com, and the opinions expressed are mine and Corey's alone. So take it away. What's this fight looking like?
All right, here we go. Coming out in round two, we've got Donald Trump coming hot across the ring. He's applying the pressure. We'll have to see what Powell does in response, but he says this, and this was this morning. He truthed and he got retruthed. You can see down there on his post, but he said, in quotation marks, preemptive cuts in interest rates are being called for by many, with energy costs way down. True. Food prices, including Biden's egg disaster, substantially lower. I mean, we are still seeing some inflation in food prices across the board, but yes, eggs are lower. And most other things, I don't know what that encapsulates. We're not going to break this whole thing down, but things trending down. Virtually no inflation, also true. With these costs trending so nicely downward, just what I predicted they would do, there can almost be no inflation, but there can be a slowing of the economy unless Mr. Too Late, that's his first shot in on Powell. That's like is that a low blow? Is that a body shot? I don't know. Mr. Too Late, a major loser. Whoa, that's a combo punch right
I
there.
don't like that. I don't like that.
Okay, well, I mean, he's definitely throwing punches. Lowers interest rates now. So Mr. Too Late needs to lower interest rates in all caps now. I think that's a punch too. Europe has already lowered 7 times. Powell has always been too late, except when it came to the election period when he lowered in order to help sleepy Joe Biden. Okay. That's enough punches being thrown. All right. My question is actually this: Does President Trump have a point? Let's see. I was listening to Warren Pies on the Compound and Friends last week. He showed some data. Some of these charts are pretty busy. I'm not going to go deep on any of these. Just want to throw a few ideas out there. Does Donald Trump have a point that things could be slowing down? Here we do see, so this is all from Warren Pies. Shout out to Warren Pies at 314 Research. I want to give them all the credit for this work. Private sector payroll growth does resemble the beginning of previous recessions. Okay, so is it recessionary? No, but it resembles the beginning of previous recessions. The latest number came in at 0.57% on that payroll growth. Very low payroll growth. Okay, next. When payroll industry breadth falls below 60%. All right, this is a super busy chart. You don't even have to look. So this is just to understand percentage of industries with job gains. We fell below 60% and recently, actually throughout even part of 2024. So it's not like a 1 month thing, but it's been going on for a year or so. And typically that's a scary level of industries that are lacking job gains, lacking expansion, right? Okay. Labor concerns again. So typically we don't see any government layoffs, and we have been. Okay. Is it a huge part of the United States economy? No, not really. But it doesn't help, right? These people do spend money. It's not helping the economy. And we've also seen a little bit of extra layoff, numbers in other industries as well. About 2 more of these. I'm going quick. Housing pipeline. D.R. Horton, the largest home builder in the United States, you could see from the bottom in April of 2022 to now. I mean, this is a little bit of a chart crime, not in the sense that they're misleading you, but they were at a very few number of homes that were stale, sitting on the market greater than 6 months, now up to 1,300. That's for, I think they do 100. I don't know how many they sell a year, but that's a pretty big number compared to what they sell a year.
Mhm.
And I think last one, credit card delinquencies. Again, are we at like the highs of the great financial crisis? Absolutely not. But the trend hasn't been lower and it hasn't been flat. So anyway,
Hey,
Mike.
hey, keep that one up there, right there, because the credit card delinquencies. Um, this one would be my biggest concern because when you see these spikes of credit card delinquencies, it's always after the recession, after the red. But what you're seeing now is we're really at a high before the red. So of the charts you showed, this would be my biggest concern. But everything you shared there says Trump's right. He should cut interest rates, I think. So,
I mean,
so
I think he might have a point. So that's what we were trying to answer that question. Does he have a point? Is he right? I mean, nobody knows for sure. He does have a point.
So I will say he has a point. This data seems to back that point. Now, the method of delivering your point to the neutral Fed chairman, calling him too late, calling him a total loser, when all that, oh, Corey, maybe he needs you to run his social media because, providing some data like this and putting it out there in a, hey, look at this chart. And of course, Powell is looking at this stuff too. Might be a better way to draw somebody in, bring me a carrot, entice me to make a move rather than beat me down and say make the move. So, but I think these are some great charts, and it does sound like we should be starting to cut those rates somewhere. But
Also,
so
and I feel the need to mention there are positive data points out there. So Warren Pies was finding some concerns. There are some strengths still out there. And again, a lot of the things that have been put on are reversible in a sense, potentially even reversible in a good way. Like maybe there's some trade deals done that are better than before. It's possible, right? So, I just want to mention that as well. I'm not trying to spread fear or anything like
yeah,
that. And certainly, I'm always looking to add high quality assets to my portfolio over time, right? That's
yeah.
the process. So anyway,
And I really don't think the trade deals could be any worse than they were before. I mean, before it was tariffs on the United States barely charging any tariffs. I don't know that it's going to get any worse other than other countries losing confidence in the US as a trade partner. That could be worse. So let me share a little bit more, how does this affect us? How does this apply? Big tech earnings coming soon. So Tesla kicks off their earnings Tuesday, Alphabet on Thursday, and over the next few weeks, all of them. Today, this just will just show you of the Mag 7 here. They're all in the red right now. Nvidia's down the most. Actually, Tesla's down the most. Nvidia's down the next most. Many of these we have in our models, although we've reduced some exposure to try to take a little risk off the table. But they're down today. And really, it's going to get down to earnings. What are they showing? These are all international companies, whether they're headquartered in the United States or not. They make their revenue worldwide. Some of them have supply chain dependence on China, Nvidia, Apple. I mean, other ones, even though they're software companies, they certainly have impact from other countries. So they're all down today. I don't know that we're at the absolute bottom, but I hope we're getting there so that we can rebound. And I hope the earnings come out well. So, and we'll find out starting, I guess, I don't know if Tesla's tomorrow morning or tomorrow afternoon, but certainly by Wednesday, we'll have an update on that one. The other big news is, and this has to do with Trump and the Fed, Gold is at a record high, $3,400. And I personally have never been a big fan of gold because you just hold it and there's an expense to holding gold because somebody has to guard it and it really doesn't do any good. However, you just have to look. It's up 30% since the start of the year. That's insane. 30%, up 8% since the tariffs. So gold is a store of value. I mean, obviously you can make some jewelry with it. There's probably some other uses, but primarily it's a store of value. And that's what people are putting some money into. Clearly they're saying, hey, we want to have something very safe. And you know, worldwide it's recognized as a store of value. I'd say the other one is Bitcoin, which I've been trying to watch to see if it moves the same way as gold. Starting to see a little bit of synchronization there where gold goes up and Bitcoin goes up. But I mean, I'll tell you, since the beginning of the year, gold's returned more than Bitcoin. Not that you could have predicted that. So we'll continue to watch that. You know, and you know, I mean, and even here, Corey, it even has quoted in here that, you know, Powell got called a major loser. I'll just say that's not appropriate. I mean, I don't think there's, whether you disagree with someone or not, attacking them like that, not appropriate. So I'll just say, you know, it seems like to me, if I was Jerome Powell, that makes me want to not do what you want me to do because I don't want to like deal with that. So we'll see where it goes going forward. There continues to be some buying opportunities. I know that some people are like, well, when's the downturn going to stop? We don't know exactly, but we can tell you that, you know, if new money comes in, you're getting it 10% off. You're getting a 10% sale. So, you know, but we just don't know. And as Corey stated, things like these tariffs can be removed, reversed pretty quickly. But are we already in a recession? Are we already in the quarter of decline right now? I'm starting to lean towards we probably are, but we will not know that for several months. But it just feels like we are. So, anything else, Corey? You rushing out to buy some gold yet?
I have never done that other than, I mean, I guess it may not be a good time to buy jewelry, right? So, oh, I heard diamonds are cheap. Diamonds and silver, that's the theme this year.
Diamonds are cheap. So if you were thinking about buying your spouse or fiance, or I guess it would be a fiance girlfriend, you know, now's the time to go get that diamond ring. It's on sale. I don't know if we'll see a rush of marriages for that, but probably not. You should never make that. Don't, you know, dating advice. Never say, I'm going to get you diamond because they're cheap right now. That's just like, don't do it. Mike and Corey's dating advice. So with that, take care, everyone. We'll see where it all goes tomorrow. Thank you. Bye.